Hi there, this is Bill with Smart Trades on October 27th in the afternoon, taking a look today at the S&P gold and the dollar. And per my previous reports, we're looking for a top in the S&P at a 1099, and the S&P just exceeded 1100 on the cash. Spiders, our target was 110.35. We got to 110.31, so just a fraction of a percent over or under those targets, but pretty much a direct hit. And from there, we've fallen off a bit. And the declines so far are on increasing volume. Certainly, there's a possibility that a top is in. In fact, that's what I favor at this point. That said, we are getting a little bit of a pattern termination here on the short term. In addition to that, the internals are diverging bullishly, so we expect a possible bounce here if there's not follow through. Also, as you can see here on the E-mini chart, 240-minute chart, which I use so we can get a little bit of an overview looking at the 24-hour chart. We're right at a trend line on the bottom of the wedge. Now, I expect that bottom of that wedge is going to get taken out, but it probably is going to at least generate a short-term bounce. That bounce should take us to about 1080 on the futures, 1084 on the cash. The alternative scenario, which is slightly bearish here, slightly more bullish, is that this count off the high is indeed corrective, and regardless of whether or not it's a corrective decline or if the top is in, we should see a bit of a bounce here. And here's the divergence that gave us the top, and you can see we have a short-term bullish divergence now. And again, that 5 waves down in the possible ABC or 1-2 pattern. Either way, looking for that bounce, as I say, 1084 would be the target basis the cash. Here's the spiders. Again, looking at that divergence that generated the top and the near perfect hit on the 110.35 target area. That horizontal line is the 110.35 area, and again the high was 110.31. Here we're actually seeing the intrabar volume actually up along with that bullish divergence. This is at least short-term bullish, but we'll see how it plays out. Again, looking at 108 would be the target, perhaps 108 plus for the spiders, if indeed we get a little bounce here as I'm anticipating. Here's the 240-minute gold chart. Gold, I think, has a better chance of making a new high than the stock market. The triangulation there between A and B on this pattern, that's the favored count, is that's an A down, B triangle, and then C, the 5 waves down, and C, which terminates the corrective pattern. Alternatively, this could also be counted as a series of 1-2s. If that's the case, we should see an acceleration shortly. The bounce should take us into the 1050, 1060 area and then fail if indeed the top is in. A strong move through about 1060 should lead us up to my next target, which is 1079 basis, the December gold futures. And finally, the dollar index. I think the dollar has bottomed. Where you can see here clearly 5 waves up. So far we haven't come off of that much, but I think we will. I think you're going to see a corrective decline. That decline should take us down to about 75.60. And if that area holds, we don't have to hold right there. We could drop, say, to 75.50, even a little lower. But as long as we hold above the previous lows, which are around 75.08, the next move should be up, and it should be a powerful move up in the dollar. And that, if it occurs, is probably deflationary. It's going to have a negative impact both on stocks, gold, commodities, real estate, you name it. And so the dollar here is crucial to watch, and whether or not it holds 75.08 and the near-term target before that. The more likely scenario is a hold at around 75.50 or 75.60. So we'll watch here over the next few days. So far things are playing out pretty much as expected. Thanks for watching and have a great evening. Bye-bye.